This brand new ETF could change how I'm investing in the stock market. Welcome back to the channel, guys. My name is Spencer and I talk all about ETF investing. And today we're discussing ticker WILD, WILD, by VistaShares. It's a new ETF that they are launching. And if you're not familiar with VistaShares, they've had a couple ETFs already launched this year that were very popular. Ticker OMAH took over the YouTube space for investing and was quickly followed up by ticker QUSA, two dividend paying, targeting 15% in monthly dividends or distributions. And I've been really happy to see that VistaShares is going to continue making these newer ETFs that are pushing towards what retail investors want. But this one is different. And we're going to jump into that and get into all the nitty gritty about this ETF. And I think you're going to be blown away by this style. And I think it's very futuristic. Just my personal take on it. But first, if you guys are interested in dividend income, in ETFs, in making money in the stock market, you are in the right place. So don't forget to like the video and to subscribe so you never miss future free content. Let's roll that intro. Right off the bat, let me know if you know any of these companies I'm going to say right now. Meta, MSTR, we all know that one. PLTR, we all know that one as well. SMCI, and TSLA. Yes, these are the 5 stocks that are going to be included in this ETF, but there's so much more to it than that. Now, if you guys aren't familiar, I have a smaller channel where I talk about usually growth ETFs, and there is one called SPMO. And it's a really interesting strategy, and I think it has some similarities to WILD. But the difference with WILD is this is a 2x daily strategy ETF. This is not an income ETF. This is pure growth speculation play, right? So if you think the market's going to do well, or if you think that we're in a good time where everything is going to boom, this is one that I would watch very closely. But let's get into the details. So starting off, what is Animal Spirits? This is WILD, of course. Animal Spirits investing approach seeks to capitalize on the behavioral and psychological factors that drive investor sentiment and market trends. And this is huge. Now, let me say, PLTR currently has near 500 as a PE ratio, price to earnings. That is remarkable. I mean, with Warren Buffett's typical trading strategy, you would never even look twice at something with a 500 PE ratio. But it continues to go up. And we've seen that multiple times. We've seen it with Tesla over and over again, and a number of other stocks that, well, if you had listened to this old investor's tale of don't buy anything with too large of a PE ratio, you would miss out. And now sometimes, of course, they have a high PE ratio for good reason, and that is something to take into account as well. But I love this psychological side of the market where hype means more than just what is actually happening behind the company, right? Because hype controls a lot of things in the market, especially as we're seeing the stock market become more and more entangled with crypto, aka Bitcoin, which we've seen, of course, with all of our really popular Bitcoin-focused ETFs and whatnot. So, WILD targets companies that garner outsized attention from traders, reflecting the influence of investor optimism and momentum, which is key. Key elements of seeking investment returns in the market. Yes, momentum is a massive thing in the market. We know this because what? GME, GameStop, that stock went absolutely bananas. It ran, I don't even know, thousands of percent points simply because of hype. And now, while I wouldn't necessarily throw your entire portfolio into just hype stocks, not financial advice, I think there is a really good portion of us that have FOMO. We fear of missing out. We want to be in some of these hype plays, and that's why I'm going to be watching WILD very closely. Now, let's talk more about it. You can access the most highly traded stocks. The U.S. market is increasingly driven by retail trading in high volatility single stocks. WILD provides leveraged exposure to a systematically rotated portfolio of the most widely traded stocks, aiming to deliver a diversified strategy for potential alpha generation. Now, what I like this is, of course, you want to know what everybody is buying. But you're also getting a mix of a few different stocks where you're not just a 1x or 2x single leverage stock, meaning if you held one of these in a 2x and it had a terrible earnings or a terrible day of trading, you would really be hurting. We have a bit more flexibility and a bit more diversification with WILD. And I am going to go over individually each of these stocks that are in this ETF because even though, I mean, currently in this ETF, because it will be changing as they've stated, I think it's important to look at what is going to be placed in here and what we think about it. Now, the strategy. Our institutional investment process is designed to choose the 5 most popular stocks based on buying momentum and investor sentiment, rotating the portfolio monthly to capitalize on changing market dynamics, which we do see all the time. While these 5 listed up here might be the most popular now, will they be in the next year? We don't know. Is it likely? Not really. Some of which I think can stand the test of time, but it's nice to know that they will be shifting. So, the ETF summary. Traders have rapidly adopted the use of single stock leveraged ETFs to express their views of the market. WLD is the next evolution, leveraging a systematic investment process to create a portfolio of 5 of the most widely traded stocks that have the strongest score on investor sentiment and momentum. Notice this is not just following the chart, and it's not just looking into what the underlying, what's happening in the company, with, like I said, PE ratio. This is different, and I'm in. One thing I said earlier that I love about VistaShares is I see them as being a futuristic ETF company. We have not seen something like this that I know of anywhere. And so they're looking at what is happening in the market. And I think that's important. It's very, very important to see what everyone wants to be trading versus what companies are making. Let's pause and take a moment to note that this is a sponsored video by VistaShares. Now, I've done sponsored content for this company in the past, and the reasoning behind it is because I like the ETFs. And it's just that simple. Of course, just because I'm talking about an ETF, whether it's sponsored or not, you should always do your own due diligence and see if that ETF fits into your investment style. Always. I do appreciate you guys for the support, and the sponsored content does allow me to do other challenges and stuff with the YouTube channel, which I'm very, very excited about. And on that, we have more stuff coming very, very soon. But a big shout out to VistaShares ETFs. I'm going to link their website in the pinned comment down below. So go check it out and let me know what you think. ETF objective for WLD is very, very interesting. And I will say this is a higher risk style of investment. We talk about leverage a lot on the channel. This is a 2x, meaning it's 200% what the underlying is doing. So a couple bad days could really hurt because you're doubling those returns. That being said, some good days in the market could be absolutely phenomenal days by using leverage. But as always, invest at your own risk, not financial advice, and just be careful. Just be careful. So let's talk about it. The VistaShares Animal Spirits Daily 2x Strategy ETF seeks daily leverage investment results and is intended to be used as a short-term trading vehicle. They're saying it themselves, guys. This is not meant to be a long-term buy and hold ETF. Now, it can be if that's your style and if you want to, but it's not intended to do that. They're saying it is intended to be used as a short-term trading vehicle, which I like, and it makes it easier. But we're going to talk more about some of the details further on. The 2x fund attempts to provide daily investment results that correspond to 2 times or 200% the share price performance of an actively managed group of equity securities, which is the target portfolio. The 2x fund is not intended to be used by and is not appropriate for investors who do not intend to actively monitor and manage their portfolios. You got to check on this one, guys. These leverage plays you should be checking all the time, in my opinion. The 2x fund is very different from most mutual funds and exchange-traded funds. The volatility of the market value of the target portfolio may affect the 2x fund's return as much as or more than the target portfolio's return. This is all some of it's boilerplate language, but I like that they have it at the forefront, telling you what the use of the fund is supposed to be. Now, there also is a lot of work that goes into this ETF. So there are some things that are a little disappointing. The expense ratio is a little bit high, 1.29%. And I know we've seen some go as high as 2 or even 3% with the expense ratio, but the reasoning behind that is this is actively managed. They're shifting it out monthly, and they're tracking a lot of parameters on sentiment, momentum. So it's going to take more time than it would just be like something you'd buy and hold forever. It's actively managed, and so I definitely understand that. And I wouldn't expect the expense ratio to be cheap on an ETF like this. As you guys know, I've become a fan of leverage simply because I think it's cool. And the main reasoning, I've talked about this in CEO interviews, amongst other things, I like the idea that the market typically goes up, or that it only goes up. If you zoom out 5 to 10 year periods, it always is going up. So if you believe that the market will continue that trend, which we don't know, leverage is a way to get more from your investment. Now, I'm not saying you should or shouldn't use leverage. Again, do what's best for your style, not financial advice, but I like the idea behind using some leverage in my portfolio moving forward. we can see this is Meta. So it's one of the 5 that are currently sitting in wild, and we've seen a lot of volatility. It's gone from $740 all the way down to $480, and I'm using the year-to-date chart. If we zoom out 1 year, we can even see there's a lot of volatility, and that's why it's important to know how to play this style of leveraged ETF. You want to play the momentum, and they are designing the momentum for you. So all you have to do is use the ETF instead of having to buy everything individually. Now, there are some times when it would have been great to hold. There are some times where it would have been terrible to hold because it would be down a leverage portion on 34%, so 60-something% if you were doing a single stock leverage. Again, with Wild, it's multiple stocks, so you have less risk. But it's really important to understand how this ETF trades and the goal behind it before you do invest. Now, let's check out some of the more really hyped up stocks in this ETF. Now we have ticker MSTR, which is MicroStrategy, another one in the ETF. This is important. It's very, very closely tied to the price of Bitcoin, right? So MicroStrategy holds, I think, like 570,000 Bitcoin at this point. And so if you're not long on Bitcoin, it probably isn't a specific stock for you, but having it in a portfolio with 4 others that are traded similarly, I think is very, very solid. We've seen it go up 134% over the last year. Even with the dip in the market, because it's tied to Bitcoin, Bitcoin held up a bit better. It's still positive by 33%. I'm a fan of MSTR. If you guys know, I make a ton of content on MSTY, as well as some other monthly paying, even some weekly paying MSTR ETFs. And I'm long on it because I'm long on Bitcoin. But again, do what's best for your investment style. So let's jump into the next really hyped up stock, ticker PLTR. Just year to date, just since January, this is up 72%. If we zoom out, it's even crazier, up 500%. And this is what blows my mind. A 2x return on something like this would be phenomenal, of course, but the ability to track the hype and momentum and find stocks like this potentially even before they're running, or if you don't have to do it before, just trading the momentum that they have is amazing. And now it takes a lot of time to do that. I personally don't have the time for it. And that's why I like using ETFs that can do all that work for me. And of course, you pay the fee for it, but it's better than me not investing in it at all, in my opinion. So PLTR, I think this one has a crazy potential. It's growing exponentially. I mean, this is wild, no pun intended, how well this one has been doing. And so I definitely see why it fits in this ETF. But I will be curious to follow the ETF and see what's being removed and added, if anything, over the next couple of months. Because I'll be able to see what is really hyped up, what has the momentum behind it, and maybe you have to scoop up more shares of Wild. Super Microcomputer, or ticker SMCI, is up 44% year to date, which is phenomenal. And if we go to the 1 year chart, this thing fell off a cliff. And again, this is the danger of leverage. It went from $91 down to $73 for an 80% loss. Now, is it going to climb back up? There's a lot of things going on with this in the news, and I'll be honest, I'm a little behind on it. I was not tracking it when everything was happening. I didn't want to buy it when it fell off a cliff, but again, using an ETF that can do all that work for me sounds like a great idea for me. So this one, definitely higher risk if you were single stock leveraging it, but because it's in a portfolio, I think is a really good pick. And there is so much hype and so many discussions about this ETF. Even some of my CEO conversations I've had are including this stock, not an ETF, this stock in the conversation, which I think is really, really important and really telling. When the top of these ETF companies are thinking about a stock, maybe we should be looking into it. Maybe I should do more content on SMCI. But we, of course, have our last stock in the account, ticker TSLA. Another one in the red year-to-date. Tesla is still down 17.26%. Now, I did scoop up some shares of Tesla. I trade this one all the time. I swing trade it, and I bought in I think I bought in around 250 to 260. So I've had a good return so far. It has come down a little bit, not enough for me to buy more shares, but we will see. Now, Tesla is always hyped. I would say it's always hyped. The PE ratio is massive, 184. And I love this stock because I swing trade it all the time. Now I might be shifting that into swing trading Wild instead, but we'll see. I want to see how it performs first, of course, and I am very genuinely curious to see how these underlying stocks do over the next couple months, how the whole market is going to do over the next year even. But Tesla, you guys know, I love it. I'm long on it. It's the way that I trade it that I think is a little bit tricky for some. It's not the typical dividend style trading that I do. It's kind of my fun money. And that's why I think I'm so energized about Tesla all the time, because I'm just actively watching it whenever I can. So I hope you guys have enjoyed this video. Again, check out VistaShares and ticker WILD down below in the comment section. Let me know what you guys think. Are we using more leverage in our accounts? Are we using less leverage? I'm genuinely really curious as to what the audience is doing, and I always love and appreciate your feedback. Now, whether it be nice or not, it still gives me feedback, so I do appreciate it. And as always, if you found this video interesting or educational, I'm popping up the other 2 videos I've done on VistaShares ETFs for you guys to check out as well, OMA and QUSA. Some phenomenal ETFs from what we've seen so far. So as always, thank you guys so much for watching, and I hope to see you in the next video.